my understanding is there was some urgency on Airbnb's part related to employee stock options that were expiring to get this thing out the door. Is there another explanation that would tell you why this needs to get done before year end?
No, I think other than that, I think the company was ready. They wanted to do it last year. It got pushed out for one reason or the other. That's definitely one of the big reasons, the internal, some operational reason. But more than that, I think the company is ready at this point. The setup is right. Yes, conditions are kind of just picking up, but with the vaccine on the way, election out of the way, and the company just picking up, there's a lot of data to support the fact that there are a lot of green shoots, a lot of the way we are vacationing now, staying longer, going to remote areas, and things like that. They're all playing right into Airbnb's hands. So I think the setup is right. I think this is the right time to get out.
What tells you that Airbnb is going to be a better IPO performer than the likes of Uber and Lyft, which, especially if you take the last month and kind of what they had to do with the ballot box out of the equation, I mean, these were tough IPOs with a lot of hype before they went public. Airbnb is very much the same. Why should investors who are buying in at the IPO or after expect that they're going to continue to enjoy nice gains?
No, I think that's a very good point. But I don't think there is a lot of hype around Airbnb. It's a name that everyone knows. They feel and touch it. Most of them have done Airbnb somewhere or the other. So people know about it. But I don't think the valuation has been hyped up at all. It's pretty reasonable. At one point, it looked like it would go to around 50 billion, at the run rate that it was. But I think everything has been pulled back. It's more rational at this point. And the revenues will probably fall from 4.5 billion down to about 2 and change this year, and will start picking up. We won't see normalized earnings or revenues till 2022 for sure, but I think there's going to be a nice progression to that point, and things are opening up. Most of the countries in the Far East especially, they have opened up quite a bit. Olympics is coming up. There are a lot of high-profile events coming up that play right into Airbnb's hands. So I think the setup is right, like I said. The valuation is very reasonable. If it comes around 30 billion, and it's not unreasonable. It's even on a multiple of sales times, it's not that big. So I wouldn't say it's Uber. I can agree, it was really blown up, but Airbnb I think is very reasonable.
No, your point about the valuation is well taken. It is down considerably from what it was at its peak. I know you guys in general, I mean, you invested in Lyft, I believe, not just because of any concerns you might have had about Uber specifically, but because you like pure plays. DoorDash is a pure play. What are your thoughts about DoorDash, which is also on the verge of going public?
Yeah, DoorDash was amazing. The S1 numbers were amazing. And we expected that. I mean, they're biggest beneficiary of this COVID situation. So I think they benefited and the numbers show it. But more than that, it's a very well-run company with a nice presence. And they're not spread out too thin. They're managed very well. The costs are very well controlled. So they are doing very well. And of course, the revenues are going to moderate going down, going further out. But you're going to see them pick up as well, because that's the way we are. It's here to stay. Ordering is here to stay. Delivery is here to stay. Just like Airbnb's rentals are here to stay. So I think these are long-term trends, secular trends, not just a fad of the year or the month. But they're going to they're here for the long run. And DoorDash and Airbnb are perfectly positioned to capitalize on that.
Shepard Smith here. Thanks for watching CNBC on YouTube.